The global sneaker market is projected to exceed $140 billion, yet most people still buy sneakers using guesswork. Today we're looking at the 5 sneakers that quietly moves the most this month. And no, they didn't all move in the direction you'd expect. One sold for $135 and hit $5,000 on resale within hours. Another retailed this spring and is already trading below what people paid for it. The third hasn't even been released yet, and it might be the smartest buy on this list. If you only look at headlines, you'll miss all of this. If you look at the data, the story is a lot more interesting. Let's dive in. Welcome back to SneakPrice, where we track the sneaker market the way a trading desk tracks equities, using real pricing data, sales volume, and demand signals instead of vibes and Instagram hype. Today we're covering 4 things. First, where the overall resale market stands right now after 2 rough years. Second, 4 sneakers that moved in very different directions this year and what each one teaches you. Third, the deeper trends behind those moves. And fourth, what we're watching heading into the back half of the year, plus our buy, hold, sell calls on each pair. Let's start with the macro picture. For the last 2 years, the story in sneaker resale has mostly been deflation. Pairs that once carried $300 and $400 premiums have been trading down closer to retail margins for resellers, compressed from the triple-digit percentages of the pandemic boom down into the 10 to 25% range. And more than one industry outlet openly asked whether the secondary sneaker market was simply over. But the data coming out of this year tells a more layered story. According to StockX's own reporting, average resale prices for Nike and Jordan product actually turned a corner heading into this year. Nike resale climbing around 5% year over year, Jordan around 6%. That's not a boom, it's a stabilization. And stabilization after 2 years of decline is, in market terms, a meaningful signal. At the same time, the overall global sneaker market, not just resale, the whole category, was valued at roughly $96 billion in 2025 and is projected to climb to about $142 billion by 2033, a compound annual growth rate of just under 5%, according to Cognitive Market Research's 2026 sneaker market analysis. That's the number behind today's hook, and it's worth sitting with. This is a market growing at a steady, unglamorous clip. Not a bubble, not a crash, just real, compounding demand for sneakers as a product category. Resale is the volatile layer, sitting on top of that steady base, which is exactly why the same month can produce both a $5,000 flip and a sneaker selling below retail. What's driving the rebound isn't new hype drops, it's classic silhouettes, wearable colorways, and a handful of genuinely scarce releases cutting through. That's exactly what we're going to walk through now with 4 real examples. The Costco sneaker nobody saw coming. Let's start with the pair that opened this episode. In late January, Nike and Costco quietly dropped an SB Dunk Low built around Costco's own Kirkland signature branding. Gray jersey-style upper, a Kirkland heel logo, even a tiny hot dog graphic as an inside joke for members. Retail price $135, no SNKRS release, no boutique allocation, just regular Costco warehouses. It sold out in under 15 minutes at the locations that got it, and because supply was so tightly restricted to physical warehouse traffic, resale prices detonated, jumping from roughly $400 in the first hours up to $5,000 for the most sought-after sizes within that same day. Run the math on that top price and you're looking at a gain of more than 3,500% over retail in under 24 hours. That's not a typo, and it's also not sustainable. But it tells you everything about how tightly supply was controlled. Why did this work? Scarcity, plus an unconventional retail channel. Nike essentially handed a genuinely limited product to shoppers who weren't necessarily sneaker collectors, which meant almost the entire supply immediately became resale inventory. That combination, true scarcity, an unpredictable release channel, and a built-in internet famous joke, is a near-perfect storm for resale premiums. Buy, hold, or sell. If you already own a pair, this is a sell into current demand, because Costco exclusive drops like this rarely stay this scarce once a brand sees pricing like this. A wider release or restock is a real possibility. If you don't own one, this is a hold off, not a buy at current resale levels. The Jordan 4 collab that beat last year's drop by selling for less. Next, Nigel Sylvester's Brick After Brick Air Jordan 4, which retailed around $230 and dropped in May. On release day, StockX recorded over 3,500 sales at an average price of $38, a 47% premium over retail, meaning early buyers were sitting on close to a 50% gain within hours of checkout. Here's a twist. Track that premium against history, and it's actually smaller than Sylvester's prior brick-by-brick colorway put up the year before, where pairs traded closer to an 87% premium about 40 percentage points higher than what we're seeing now. If you only looked at that one number, you'd assume the collab underperformed. But sales volume tells the opposite story. This drop moved 51% more pairs on release day than the previous one did. More supply hit the market, prices came down as a result, but demand was actually stronger, not weaker. This is exactly the kind of nuance that raw headlines miss, and now resellers need real data to catch. A lower premium with higher volume isn't a red flag. It's often a sign of a brand successfully scaling a collaboration without killing it. Buy, hold, or sell. Hold. The pair is still trading at a healthy premium over retail, but the wider release pattern means the days of easy triple-digit markups on this partnership are likely behind it. The resale-only Jordan 4, that keeps climbing with no retro in sight, now for a completely different kind of story. The Pure Money Air Jordan 4. This colorway last retailed in 2017 for $190, and Jordan Brand has not confirmed a new release since, because supply is fixed and can only shrink through wear and damage. Resale prices have been on a slow, steady climb, now trading anywhere from $400 into the $1,200 range depending on condition and size, which puts the high end of that range at roughly a 550% gain over the original retail price. Built up gradually over close to a decade rather than in a single spike. This is the opposite mechanism from the Costco dunk. There's no hype spike here, just simple textbook scarcity economics. Fixed supply, ongoing demand, no restock valve to release pressure. Sneakers like this behave less like a collectible and more like a slow appreciating asset. Buy, hold, or sell. Buy if you're playing a long-term hold and can find a clean, dead stock pair, but treat it as a multi-year hold, not a flip. The lack of a confirmed retro is exactly what makes the long-term case work, and it's also the biggest risk if Jordan Brand changes course. The sneaker that's selling below retail right now. Not every story is a winner, and a Bloomberg-style market show has to cover the losers too. The 2026 Toro Bravo Air Jordan 4 retailed at $220 this spring. Livestock X data has the last recorded sale of $169, with the average sale price over the past 3 months sitting at $186. That's a loss of somewhere between 15 and 23%, depending on which print you look at. And the pair has trended downward steadily since release rather than spiking and correcting. This is what oversupply looks like in real time. It's a genuinely well-designed fan-favorite colorway. But general releases with wide distribution simply don't carry the same resale ceiling that limited collaborations do, especially in a market where buyers have become more selective about what's actually worth a premium. Buy, hold, or sell. Sell if you bought at retail hoping for a flip. The data says this one isn't coming back before you'd want it to. If you just want to wear a great-looking Jordan 4, this is genuinely one of the better times to buy below retail. The Kobe calendar. Everyone's watching finally, a forward-looking one. Nike's Kobe Pro Trail lineup has two notable Dunk Low releases on the calendar for mid-year, a Draft Day colorway and a WNBA All-Star Edition, both priced in the $135 to $145 range at retail. Neither has resale data yet, but the model's track record gives us something to size expectations against. Prior Kobe Pro Trail colorways have historically opened trading anywhere from a 40 to 100% premium over retail in the first weeks before settling, driven by a combination of performance hoopers who actually want to play on them and collectors chasing Kobe's growing legacy on the resale side. Buy, hold, or sell. Buy at retail if you can secure a pair through SneakPrice. Kobe product has one of the more reliable demand floors in the entire Nike portfolio right now. So why is the Jordan 4 as a model consistently one of the stronger performers across all these examples? It comes down to breadth of demand. Unlike a niche model with a narrow collector base, the Jordan 4 has broad appeal across hoopers, collectors, and casual buyers alike, which gives it both high liquidity and resilient pricing. The model's average resale value is actually appreciated over its tracked history, even as parts of the broader market cooled. Why does Kobe product keep climbing? Two demand pools stacking on top of each other. Actual basketball players who want a genuinely great performance shoe, plus a collector base built on nostalgia and Kobe's legacy, which only grows over time rather than fading the way most athlete signature lines do after retirement. And why is Nike SB behaving differently than it used to? The Costco story is really a distribution story. Brands are experimenting with releasing hype product through completely unconventional channels, warehouse clubs instead of boutiques, surprise drops instead of SNKRS raffles, because it generates a different kind of demand spike that's harder for bots and resellers to game in advance. Zoom out, and the pattern across this whole market right now is the same. Buyers have gotten more selective. The days of anything limited automatically resells are over. What's replacing it is a market that rewards genuine scarcity, strong storytelling, and cultural relevance. Here's the scorecard from today. Top sneaker to buy right now, the Kobe Pro Dunk Low drops at retail if you can secure a pair. Most undervalued, the 2026 Toro Bravo Jordan 4 currently below retail for a genuinely well-made colorway. Most overvalued, the Costco Kirkland SB Dunk at current $5,000 resale levels. That premium is unlikely to hold if any restock happens. Biggest risk, the Pure Money Jordan 4 the entire long-term thesis depends on. Jordan brand never retroing it, which is out of anyone's control. Best flip, the Nigel Sylvester Brick After Brick Jordan 4 if you can source it in your release date pricing. Best long-term hold, the Pure Money Jordan 4 for buyers who aren't looking for a quick flip. And if you want to track any of these sneakers yourself, real-time pricing, verified sold comps, and flip scores calculated automatically, that's what SneakPrice was built for. Links in the description. We'll see you in the next one. If this kind of breakdown is useful to you, that's exactly what we do every week here on SneakPrice. Real pricing data, real demand signals, no guesswork. Subscribe so you don't miss next week's report. Drop a like if this helped you think about your own collection differently. And tell us in the comments what's your buy, hold, or sell call on the Costco dunk. And if you want to track any of these sneakers yourself, real-time pricing, verified sold comps, and flip scores calculated automatically, that's what SneakPrice was built for. Links in the description. We'll see you in the next one.